Let's talk about Nearmap ASX NEA. This company is all about providing high-resolution aerial imagery to enterprise clients so they can use Nearmap's photos to make things easier for their business. Hey guys, my name is Fyzee and this channel is about finance and investing, and in this video we're going to be exploring Nearmap's share price currently, what they do exactly, its financials, and my personal opinion on the stock. Before we begin, this video is not financial advice. I'm not a financial advisor. We are speaking in a very general sense only. I just have a passion for investing and finance, same as you. So let's get into it. Starting off with Nearmap's share price currently, it's sitting at $2.10, and the 1 year return for this stock is quite good at 110%, and looking at the 5 year return, it is quite phenomenal at about 450% as well. But more recently, there has been a bit of drama surrounding the stock, and the share price has been very volatile, as you guys can see, due to a short seller report that was published by J Capital Research, as you guys can see over here. Now, this report was quite nasty and it contained untrue statements, and this report was published on February 10th, and we saw the share price tumble roughly around 7.3% on the day, as you guys can see right here, due to investor concerns around the stock. Now, almost immediately after, Nearmap requested a trading halt on the stock to go through the report, and on February 15th, they published their responses and fired back and clarified to everyone all of the facts surrounding that report. And this caused the share price to jump 19% on the Monday, and it ended up in the greens, which was due to investor confidence surrounding the stock. However, looking at the stock price now, it seems to be more or less back in the trading range of between $2 to $3 for the last 10 months or so. So let's look into what the company does exactly. Now, as mentioned before in the intro, Nearmap provides high-resolution images to businesses, and the use case for this is very vast. For example, at the moment, Nearmap has 3 core verticals of roofing, insurance, and government. Now let's look into roofing. Now, why this is good is because roofing companies can use Nearmap's services and work out the proper dimensions of the roof, its elevation, its pitch, and the best part is that all of this can be done remotely through online, and these companies don't actually need to come out to the premises to inspect it manually. It can all just be done via the cloud, and essentially they can make their businesses very efficient. They can save time, energy, and so on, and they can use Nearmap services via a browser, so all you need is an active subscription and basically an internet connection. Now, since Nearmap operates in lots of regions like Australia and North America, roofing is a pretty big industry, and the average roof is replaced every 10 to 15 years, and roof damage claims can be assessed leveraging Nearmap's roof geometry data, and Nearmap has also partnered up with industry leaders as well to help the roofing businesses. Similarly, with insurance companies, they can use Nearmap services like AI and historical image libraries to work out the exact risk of an area without the insurance companies doing this themselves, which of course provides efficiencies. And this helps insurance companies to work out the insurance premium, and Nearmap also helps with things like assessing weather risk and natural environment risk due to the vast amounts of images that they can capture. And lastly, with the government, this is quite good as well because in developed regions like in Australia and North America, suburbs, towns, and cities are planned very meticulously through town planners and local government authorities. And these authorities try to make sure that in a given area, there's lots of greenery, parks, and other natural facilities like open spaces, urban spaces, so people can live in a nice environment. So Nearmap's offering helps a lot with urban planning as well. So let's look at how these verticals have been performing so far. Now, looking at the verticals in North America for insurance, there is 43% growth based on the previous corresponding period of the ACV, which is the annual contract value. They've adopted AI content to drive strong growth from insurance carriers, and they've got other efficiencies as well. Looking at the government, there has been some pretty strong growth coming out as well at 53%, and the company is looking to have strong relations with the local government bodies. And lastly, looking at roofing, which had the most phenomenal increase of 200% as their transaction volume grows with superior semi-automated technology. Now, with Nearmap, the key competitive advantage that they have over others is their HyperPod/HyperCamera 1. This is patented, so they're leading the way when it comes to this technology, and they've been able to successfully deliver fixed vertical images so far. Then fixed oblique images, and scanning in 3D is working fine as well, as you guys can see. But the next gen scanning of HyperCamera 3 is being tested right now as we speak as a prototype in aerial flights right now. So once that launches, it's going to be very interesting to see that huge step forward. Alright, now let's look at the financials of this company. But before we do, if you guys have found value so far, please leave a like and subscribe. It really helps out with the YouTube algorithm. Let's get into it. Now, looking at the opening annual contract value, or ACV, it's grown from 90,240 to 106,000, which presents an increase of 18%, but in the same year, new business were dampened as well by about 40%, but upsells went up quite a bit and doubled, which is a good sign. Now, in this year, they took a bit of a hit on the exchange rate of 4,555. However, despite all this, the closing ACV remains strong at about a 16% increase. Now, looking at the P&L, we can see that the revenue has increased from 46k to 55k, and when it comes to expenses, they've actually been able to keep all the expenses in check, and it actually decreased by 700. Now, overall, it's very important to note that this company is still making a loss. However, if we compare the loss from the previous period to now, the loss has actually decreased by roughly 50%, which is a good sign that they're moving towards becoming profitable. Now, for some weird reason, almost every single company that we review on this channel is making a loss, but they all have some sort of potential to keep moving forward. Now, for this company to keep on taking losses, it needs to have a strong cash balance. So let's have a look at the balance sheet. Now, straight away when looking at this report, we can see that there has been a massive increase in the cash and cash equivalents from 36,140 to 130k, and the other current assets remain fairly the same. And looking at the other side of the balance sheet, which is the liabilities, going across all of these line items, we can see that most of these liabilities have been sustained and they haven't increased by too much at all. And the current ratio for this company at the moment is 2.15, which is very good to see. And the main driver of this is a huge cash inflow that they got, which we will speak about in just a second. Now, compare this to the previous period of 2019, and the ratio was 0.91. So this is a massive increase in the right direction. Looking quickly at the cash flow statement, we can see that the receipts from customers has gone from 46,640 to 58,000, and the company has reduced the outflows as well when it comes to operating expenses from 46,500 to 37,000, which ultimately created a positive operating cash flow for the company compared to the previous period. But looking at the cash flows from financing activities, we can see that the main cash inflow for the company has come from the recent capital raising, where cash increased from 0 to 92,700. Now, this is good to see because we are finally seeing the loss decrease on the P&L, and they're loaded up with cash to continue testing out their new camera and find new growth opportunities. So based on this, we can say that they're in a good position to capitalize on their mission because they've got the money to do so. Now, my opinion on all of this is that looking at the financials, although it's not profitable just yet, they are on a path to do so, and we should be able to see profit coming through in the next few reporting periods. That's if they can keep up with the current state of how things are going. Nearmap should be a profitable company. Now, I also want to make a note and say that Nearmap has expanded globally into North America, which presents more growth opportunities because you can only get so much growth here in Australia because our market is pretty small compared to the rest of the world, and a business like this can be deployed in basically any country, and this business can yield pretty good results as long as Nearmap's sales team gives proper value to their prospects and their clients so they can win over them. Now, as long as Nearmap can keep updating their technology, they can keep on onboarding new customers over time. This company also has plans to further expand into Europe, which presents pretty good growth opportunities. So my personal outlook on the stock is pretty positive. Now, I haven't bought this company just yet. However, I am paying close attention to what's happening, and it seems that a good buying opportunity might be there if the stock drops below $2. But let's see what happens, and guys, please do your own research. So for now, this company is going to stay on my watch list, just like I have IOU Pay and Dough on my watch list right now. These two are great fintech companies as well that we've analyzed on this channel, so go check these two videos out. And guys, please like and subscribe, and I'll see you in the next one. Bye now. Now I haven't bought